Hello everyone, welcome to JAIIB CIB Prep. In today's video, we'll talk about unit number 5 and we'll complete this unit, operational aspects of deposit account. So in this particular unit, we'll understand features of deposit accounts like current account, savings account, BSBD account, fixed deposit, RDs. We'll understand about the interest on deposits account, what are the prohibitions, exemptions. We'll discuss inoperative and unclaimed deposits, operational instructions, nomination facility, attachment order. Then we'll look on to some practice questions and then we'll conclude this unit. So let's start. Um, like banks get most of their money from deposits. This is a known fact, and this money is then used for giving loans and making investments. So bank can engage in only two kind of activities: lending and investing. And the deposits which a bank gets are used for these two activities. But bank don't look just how much money they collect. They also focus on the cost of these deposits, like they have to pay interest to the customers as well, because it affects how much profit the bank earns. And each bank may slightly offer different features in deposit accounts like interest rate, minimum balance and other services. And now let's move on to different types of deposit accounts. Firstly, let's understand a current account. So, a current account is like a daily use account, specially made for business people, traders, and companies. What are its key features? So, no interest is paid on the money in this account. Keep that in mind. Zero interest. So, bank does not pay any kind of interest on current account, and it is useful for those who have many day-to-day transactions. So you collect money, you withdraw money, you pay money. Ideal for the businesses, traders, companies, firms, and anyone like individual company partnership club can open it. So there are no restrictions, but some certain sect are not allowed to open current account. Uh, we have already discussed it in the previous unit as well, like illiterate person, blind person, Pradhanashin women, and minors. They cannot open current account in their name. One of the key features of current account is that there are unlimited withdrawals and deposits. There is no upper or lower limit, but again, bank may ask for a minimum balance, but there is no maximum capping. You can keep as much money as you want in your current account. There is no maximum limits. So unlimited transactions are allowed, and current accounts can be operated by individuals or authorized persons like signatories or someone with power of attorney. Check, net banking, debit instructions like NECH, they can be used. Again, ATM withdrawals are allowed for all individuals, and bank can also deduct charges or interest if authorized by the company. So if a businessman needs to pay vendors daily and receive money from clients regularly, he should use a current account and not a savings account. Before moving forward to savings account, there is also a temporary overdraft in current account, which we should discuss. So, if a trusted customer asks for a short-term loan more than their account balance, bank may allow it, and this is called a temporary overdraft. A written request and promissory note is required for temporary overdrafts in current account. Let's move forward to savings account now. A savings account, as the name suggests, it is mainly for individuals who want to save the money and earn interest. Some of the key features are: it can be opened by individuals jointly or singly. Interest is paid on money in this account, although interest is not very much high. But again, there's no interest in current account, and if you keep your money in savings account, you will earn a interest. A savings account may be with or without a checkbook, and money can be withdrawn by check, withdrawal slips, ATM, net banking, mobile banking, and similarly, it can be deposited via cash, online check. This type of accounts are not allowed for business or trading transactions. There's no limit on how much balance you can keep. Also, bank follow RBI rules for interest rate. there is differential interest which bank follows. For example, SBI may offer you different interest on savings account. ICICI Bank offers you different account. So this is differential interest rate. Earlier, it was controlled by RBI, but later on, RBI deregularized it, and it is up to the banks uh, to decide what interest rate they want to offer. But again, up to 1 lakh rupees, same interest rate apply for all. Above 1 lakh, bank may offer different rates, but not discriminate between customers with the same amount on the same date. Now, who can open a savings account? So, any individual can open a savings account, minor above 10 years of age, Karta of HUF, and certain institutions which are allowed by RBI, and we'll discuss them just in a moment. Before that, who cannot open a savings account? So, savings account cannot be opened by government departments like municipal bodies, panchayats, political parties, businesses or companies, professionals, professional firms like doctor, lawyers, in partnership, and any organization depending only on government firms. Now let's talk about the institutions which are permitted by RBI to open a savings account. So these are special institutions that are allowed to open savings account, like primary cooperative credit societies which are funded by bank, Khadi and Village Industries Board, Agriculture Produce Market Committees, registered committees which are registered under Societies Act and not State Cooperative Acts. Section 8 companies. Section 8 companies are those companies which work for charity and they don't use limited in their name. Institutions whose income is tax free, self-help groups, farmers club. So these kind of institutions are allowed to open savings account. A student saving pocket money or a salaried person saving monthly income, they should use a savings account. But again, a merchant who deals with many customers and vendors daily, they should open a current account. Let's talk about some key regulations for savings account now. Number one, minimum balance. So some banks require the customers to maintain a minimum balance in their savings account. If the balance go below the limit, the bank may charge a penalty. But before charging the penalty, the bank must inform the customer by SMS, email or letter. If the required minimum balance is 2000 and the account has only 500, the bank will notify the customer about the shortfall and the customer will get 1 month to add the required amount. And if it is not done within that time, a penalty will be deducted from the account. Again, the charges must be reasonable and based on actual service cost. The account balance should not go negative only due to the penalty. Keep that in mind. Very important. And if the customer consistently fail to maintain the minimum balance, the bank may close the account or change its category, but only after a discussion. Let's move forward to withdrawals. Some banks put a limit on the number of withdrawals allowed in a month. There may also be a limit on the amount that can be withdrawn at once. So, a customer may be allowed only 5 withdrawals per month or maximum withdrawal of 25,000 in one go. Withdrawals using withdrawal slips are allowed only for account holders and the passbook must be shown. Now, what is a passbook? A passbook is given to the customer when savings account is open. The customer has to sign the acknowledgement to confirm the receipt. It is opened at account opening. It is issued at account opening and it is updated regularly. So it shows every transaction, every debit and credit which happens in the account. Transfer of accounts. A customer can request to transfer their account from one branch to another branch of the same bank. But a written request is required and all unused checks, they must be returned to the old branch. The account opening form and signature card will be sent to the new branch. And with core banking system and multi-city checks, physical transfer is not always necessary. Only the base branch gets updated. Staff accounts. A bank staff member may have a limit on how many savings accounts they can open in their name or jointly with family members. checks issued from staff account must be carefully checked to ensure sufficient balance. Third party checks or demand draft should not be credited to staff account. If any staff account shows unusually large transaction, it must be monitored. A customer can close a savings account. So, a customer can close a savings account by submitting a written request, but also it has some steps involved in it. So, a customer has to return all unused checks and present the passbook. The bank will get the updated. Bank will update the passbook and stamp account closed on each page, and the remaining balance will be paid only after the customer submits a check or withdrawal slip. Let's understand basic savings bank deposit accounts now. So this is a special account designed for financial inclusion and mainly for customers from low income group. So there is no minimum balance requirement. There are some free services in BSBD account like cash deposit at bank branches, ATM, cash deposit machines, credit of funds via UPI, NEFT, checks, IMPS, and unlimited deposit in a month. So there's no restriction on amount or number, but there are restrictions on withdrawal. So in under free services, up to 4 withdrawals per month are allowed. One ATM come debit card is provided. A checkbook is not included in free service, but it may be given at the bank's discretion. Bank may offer extra services like SMS alert or internet banking, but charges should be reasonable and clearly mentioned. The services must be optional for the customer, and there's no minimum balance should be required for these services. And if such service require maintaining a balance or they come with extra charge by default, the account will no longer be treated as a BSBDA. One of the important condition of BSBDA is that only one BSBDA is allowed. So, a customer can open only one BSBDA in the entire banking system. If the customer already has a savings account in the same bank, it must be closed within 30 days of opening the BSBDA, right? And the customer can still open other accounts like FD or RDs, they are allowed. Uh, So let's discuss fixed deposit and then we'll move on to recurring deposit. So what is a fixed deposit? A fixed deposit is when a customer keeps a fixed amount of money in a bank for a specific time period and earns interest on it. For example, a customer deposits say 10,000 rupees for 3 years. So this is a fixed deposit. And fixed deposit can be for few days, months or years, but minimum period is 7 days and usually the maximum period is 10 years. A customer can open FD with any amount, but large value FDs are called bulk deposits, and there was a revision on the amount. Last year there was a revision on the amount, and in scheduled commercial bank FD of 3 crore or more is considered as bulk deposit, and in regional rural banks FD of 1 CR or more is considered a bulk deposit. Term deposit receipt is provided by the bank, so the bank must give a receipt called term deposit receipt, which includes customer's name, account number, uh, deposit amount and interest, date of deposit and maturity, due date, nomination status, and branch transferability. So everything is provided under term deposit receipt. What happens on maturity? So when the FD periods end, the bank will either repay the amount or renew the FD depending on the instructions. And if no instructions are given, the bank should inform the customer in advance about the maturity. Premature withdrawals. So if the customer needs money before maturity, the bank allows premature encashments. But in some cases, the bank will charge penalty and the bank actually pays the amount after the penalty is deducted. Some FDs are issued without the option of premature withdrawal. However, For FDs held individually or jointly, a customer for 15 lakhs or below, premature withdrawal facility must be provided. If the FD matures and the customer does not claim it, the bank pays interest at savings account rate or the contracted FD rate, whichever is lower. So, if the maturity amount is 20,000 or more, it must be credited to the customer's account and it cannot be paid in cash. So, 20,000 or more, this amount goes directly to the account, no cash. Okay. How interest is paid? So, interest on FD is usually paid quarterly. Alternatively, the customer may choose to get it on maturity along with the principal. In that case, interest is compounded quarterly. And based on these, there are two types of fixed deposits. Number one, ordinary term deposit. So, interest here is paid periodically. And then there are reinvestment deposits. So, interest added to principal and paid at the end. Uh, Term deposit joint holders. So, in case of joint FDs, the bank can add or remove joint names if all account holders agree and split the FD amount. Split the FD amount among the joint holders without changing the total amount of period. So, this can be done. And a customer can take loan by pledging the FD receipt along with a lien letter. The loan amount is given after keeping a margin on the FD, say 5 to 20% of margin. And for example, if the customer has a fixed deposit of 1 lakh, bank may give him anywhere between 80,000 to 95,000. So bank charges interest that is slightly above the FD, 1 or 2% above the FD. So if bank is offering 7% interest on FD, the bank will charge 8 or 9% for loan against FD. If the FD is closed early, the loan is recovered from the FD proceeds and interest is recalculated with penalty if it is applicable. Now let's move forward to recurring deposits. So in recurring deposit, the customer deposit a fixed amount every month for a set period. For example, Mr. A deposits. So this is Mr. A, and Mr. A deposits a sum of 1000 rupees for 24 months. So this is our recurring deposit. Interest is calculated using quarterly compounding. If any monthly payment is missed, the final amount is reduced. Rule for early closure and loan against RD are same as fixed deposit. No RD is allowed in foreign currency accounts like FCNR accounts. So no RD is allowed in these accounts. Hybrid deposits. Hybrid deposits, you can also understand them as combo deposit. So it is a deposit account which offers the feature of a savings account as well as a term deposit account. So some banks offer a combo where if the money is in excess in the savings account, it automatically gets transferred to FD, keeping a minimum balance, and if needed, amount is auto reversed from FD to savings account to clear payments. FDs can be made in units as well, like a unit of 1000, and if the customer needs money, they can break only a part of FD. So, whole FD has not to be touched, only a part of FD will be, will be break when you do a premature withdrawal. Special deposit types. So, in this, we particularly have cash certificates, annuity deposits, and certificate of deposits. In cash certificates, it is a variant of FD where the certificate is issued at a discounted price. Customer gets full maturity value later. For example, a person has to pay 9,000 now and he will receive 10,000 on maturity. So this is a cash certificate. And same rules as regular FD applies on cash certificates. Annuity deposits. Annuity deposit is just opposite of recurring deposits. Customer deposits a lump sum and bank return it in equal monthly or quarterly installments, and each installment includes principal and interest component. For example, a 1 lakh deposit, a person deposited a sum of rupees 1 lakh for 5 years with quarterly payout of 20 equal payments. So here the bank will pay him 20 equal payments, where uh, interest is also included at the time of payments. Certificate of deposit. Certificate of deposits, they are not regular bank deposits. Keep that in mind. They are short-term money market instruments. They are issued by scheduled commercial banks, small finance banks, regional rural banks, and the minimum amount of a certificate of deposit is 5 lakh rupees, and they are issued in the multiple of 5 lakhs. They have a tenure of 7 days to 1 year. Interest can be fixed or floating, floating based on market benchmark. Certificate of deposits can be issued at discount or with interest coupons. They are traded in secondary market. Stamp duty is applicable on certificate of deposits, and they can be bought back if all investors in that issue are given the option. Let's understand interest on deposit accounts now. We'll move with general rules, and then we'll move specifically to types of deposits. So, as a general rule, bank must have a clear interest rate policy approved by their board or a committee. The same interest rate must be given to everyone for the same time. There should not be any kind of discrimination or favoritism. Bank must inform customers about their interest rates in advance. These rates must be recorded in the core banking system for inspection. Banks are not allowed to negotiate or bargain interest rate with customers. Rates must be reasonable, consistent, and they should be open for inspection by regulators. There's a rounding off, so round off interest to the nearest rupee, and for FCNR deposits, round off to two decimal places. And if there is any change in rates, they must be quickly shared with customer and branches. Fixed deposit receipt for deposits of less than 3 months or where the last quarter is incomplete, interest is paid only for the actual number of days. Bank usually calculate interest using 365 days in a year. Some uses 366 and leap years. So if a 2-month deposit is made, interest will be calculated for exact number of days and not months. Banks must tell depositors how they calculate interest at the time of accepting the deposit. What happens if FD matures on a non-business day, like on a holiday or Sunday? So interest is paid for the extra day at the agreed rate. And for reinvestment, FDs or RDs, interest is paid on the full maturity value for the extra days. So if FD matures on Sunday, payment is made on Monday and you will get one extra day's interest. Transfer of branch. So if a rural or semi-urban bank branch is taken over by another bank, the original term agreed with the old bank will continue. The interest rate will remain the same till the deposit matures. Interest on different deposit types. Number one, we'll talk about current accounts. So, no interest is paid on normal current accounts. There is an exception. So, if the account holder dies, interest is paid from the date of death till repayment to claimant at the savings account rate. For example, if Mr. X dies with 2 lakh in his current account and the amount is paid to the families 10 days later, so interest will be provided for those 10 days at the rate of savings account rate. Uh, Savings account. So banks can freely decide the savings bank interest rate. Interest rate is calculated daily on end of day balance. For balance above 1 lakh, the bank may offer different rates, and for balance up to 1 lakh, the rate must be uniform. Interest must be credited quarterly or more frequently. A bank may pay 3.5% of balance up to 1 lakh and 4% for amount above 1 lakh. term loans, so interest rates can differ based on tenures, size of deposit, and whether a premature withdrawal option is available or not. So when we say tenure, different rate for different periods, like for 1 year, 2 year. For 1 year, the rate can be 5%. For 2 years, it can be 6%, depending on the size of deposit. So special rate are allowed only for bulk deposits. Premature withdrawal, bank can offer higher rate for deposits without early withdrawal option. But for deposits up to 15 lakhs by individuals, premature withdrawal must always be allowed. Let's understand premature withdrawal rules. Interest paid for the actual period deposit remained, not the agreed rate. If you do a premature withdrawal, no interest is provided if it is withdrawn before 7 days. Bank must have a board approved policy for penalty on early withdrawals. Penalties can only be charged if the customers was told beforehand. No penalty if withdrawal is due to bank branch transfer, and if deposit is split after death of depositors, then also no penalty will be charged. Overdue term deposits. So if term deposit is renewed after maturity, interest depends on bank's policy. If it is not claimed and lying in the bank, interest is paid at lower of savings bank rate or original FD. A floating interest rate can be offered by banks, and these floating interest rates are linked to external benchmark rate. For example, a bank offer FD rate with 1% more than repo rate. So if the repo rate, the current repo rate is 5.5%. So if the repo rate is 5.5, the bank will give up to 6.5. And if the repo rate increases, say from 5 to 5 to 6.5, then the FD rate will also get up by 1%. So now bank will offer 7.5% of interest. Additional interest on deposit, domestic deposits. Banks are allowed to give extra interest on deposits to certain people. Now, who are eligible for these additional deposits? Number one, bank employees and top management. So, if a bank employee or senior official like chairman, executive directors open a deposit in the same bank, they can get 1% extra interest on their savings bank or term deposit. This benefit also applies if the deposit is held jointly with a dependent like a child or a spouse. So if the regular FD rate is 6%, a bank employee will get 7%. Number two, senior citizens. So bank usually offer 0.25% or 0.5% extra to people aged 60 years or above, but this depends on the bank's policy. If the normal FD rate is 6%, a senior citizen might get 6.5%. There are certain important rules for bank staff deposits. Let's understand them. Number one, extra interest is given only while the person is eligible. So if a staff member retires or leaves, the benefit continues only the till the FD is till the FD maturity and not after that. If a bank employee is working on deputation to another bank, both banks can give extra interest. And if someone is working on fixed contract or deputation, extra interest ends after the contract period ends. A federation where bank employees are not direct members, they cannot get extra interest. The depositors must give a declaration that the money belongs to the current or retired bank employee, a deceased bank spouse, or an association where members are bank staff. Inoperative or unclaimed accounts. So inoperative accounts is an account where there is no transaction for 2 years or more. Savings, with respect to savings account, interest must still be paid regularly even if the account is inactive, and no penalty should be charged for not keeping the minimum balance. And if a FD matures and it's not claimed, the interest paid will be lower of the original FD or the current savings bank rate. If, for example, if FD matures at 6.5% and savings bank rate is 3%, the bank will pay 3% until it is claimed. For frozen accounts, if a term deposit is frozen by law enforcement agencies, if the FD matures during that frozen period, the customer gives a request within 14 days, the FD is renewed from that maturity date. And if the request comes after 14 days, so renewal starts from date of request. The interest for that in between period is kept in a non-interest bearing account and it is paid later. For example, FD matures on January 1st, request is made on January 10th, so renew from January 1st. If request made on January 12, 20, so renew up from January 20. And if the customer does not request anything, the bank may auto renew the FD for the same term as before. But again, the bank must inform this to the customer as well as the enforcement agencies. And for frozen savings account, bank should continue paying interest as usual. Prohibited practices, so prohibitions and exemptions, a bank must not do any of the following things. So bank should not pay any kind of commission or fees to individual or companies to get deposits, except to the agents collecting door to door deposits under a scheme, direct selling or marketing agents, business correspondent or facilitators. A bank should not offer any prize, lottery, or free trips to get deposits. They can give cheap gifts like diary worth 250 rupees or less. So, a pen, a diary is fine, but a bank should not offer a free trip for deposits. Bank should not raise deposit just to give loans, especially by using agents or third parties. Should not mislead ads, should not show any kind of misleading ad that highlights only compound interest without showing the actual simple interest. Bank should not take interest free deposit except in current accounts. A bank should not accept deposits where a private financier gets the deposit receipt in their client's name or collect deposits through power of attorney or similar authority. Bank should not give loan against deposit placed in other banks, and banks should not create a fund for charity using depositor money unless it is agreed with the depositor. There are certain exemptions as well. Some rules do not apply to deposit from institutions that are allowed in money markets, deposit from which the bank issued participation certificates, certificate of deposit scheme, capital gain account scheme deposits, and interest payment for delayed collection of instruments like check, draft, bills, or telegraphic transfer. So these are exempted to interest rate guidelines. Now let's discuss in detail about inoperative accounts and unclaimed deposits. An inoperative or dormant account, so also known as dormant account. So an inoperative or dormant account is a bank account in which no customer initiated activity has taken place for a certain period. So for savings and current account, if there is no deposit or withdrawal for 2 years, it becomes inactive. And just getting interest from the bank or bank charges being debited, which are not mandated by the customer, they will not be counted as activity. So say you opened a savings account in 2018 but stop using it in 2020, and if you haven't made any deposit, any withdrawal, or you have not done any online transfer, say till 2022, so this account becomes inoperative. So these accounts may misused for illegal or fraudulent activities. So a special care, special caution must be given to these accounts as well. Uh, Bank should take proactive actions. What are they? Like bank must do a yearly check on all accounts with no activity for 1 year to detect if there are any nearing dormancy. If no activity is found, the bank must send a letter or email to the customer asking why the account is inactive, and they request the customer to do at least one transaction to keep them active. If there is no customer activity for 2 years, the account is officially classified as inoperative. And if there is any customer activity, like if customer has given any mandate, if there are any standing instructions, then also uh, the bank will count that as customer activities. So if a customer has mandated the bank to pay EMIs from that savings account, so that will be considered as customer activities. But if only interest is credited by bank or bank charges are debited, that will not be counted as a customer's activity. What are the exceptions? So, if the customer has given instruction to credit FD interest into savings account, this is treated as a customer initiated transaction. So, this will be exception to the account. If you have a FD, for example, if you have an FD and the interest is credited every quarter to your savings account, so this account remains operative as long as such credit continues. So, if the bank finds that the customer has permanently moved, uh, if the customer has been moved to another city, the bank can suggest the customer to transfer the account to the nearby branch, or can ask the customer to close the account and transfer the funds to the new account. And what happens if a customer cannot be reached? So, if letter or email are not delivered, the bank should make efforts, try calling the customer, use email, ask references, people who introduce the account, contact the employers, nominee, and legal heirs. If the customer may be deceased, but if the customer responds to bank communication, the bank gives a reason for inactivity. If the customer responds and gives a reason for inactivity, the bank can extend active status by 1 more year. The customer withdraws the full balance, the bank should allow it after proper identity verification. And if customer does even one transaction, account should be made operative. A bank must ensure that the customer is not inconvenienced. No charges should be taken to reactivate the account, and all necessary precautions they should be followed. Even if account even if the account is inoperative, inactive, so it should be not marked as dormant if it is inoperative under a garnishee order. If the account where only periodic activity is expected, like pension account, or it is an account under lien, or account with a negative balance where the customer owes money to the bank. So these type of accounts are not marked as dormant even if they are inactive. As a transparency measure, bank must display on their website a list of accounts that have been inactive for 10 years or more, and only basic details are to be displayed, like name and address of account holder or authorized person for company accounts. No sensitive details are to be mentioned, and they must also provide step by step instructions and forms for customers to claim their money or reactivate the account. Now let's understand Depositor Education and Awareness Fund. So it is created by RBI in 2014. This fund collects unclaimed money lying in bank for 10 years or more. What type of deposits are covered? So every type of deposit which comes to your mind is generally covered under this scheme. So savings account, current account, FD, RD, overdue demand draft, pay order, mail transfer, telegraphic transfer, unused balances in prepaid cards, pending NEFT or RTGS credits, foreign currency accounts which are converted to INR. So all of them are covered under this scheme, this fund. Uh, some of the key points are that money must be transferred within 3 months after 10 years of inactivity. Money is used for educating and protecting depositors. Customer can still claim their money even after it is moved to DEAF, Depositor Education Awareness Fund. Bank will pay the customer first, and then bank can claim reimbursements from the fund. What about foreign currency funds? So if a foreign currency deposit is inactive for 3 years after maturity, it must be converted to INR. And if no maturity period is defined, bank gives a 3 months notice before the conversion. Customer can claim the amount in INR or equivalent foreign currency at the current rate. If the amount is already moved to DEF, bank can still pay and claim the refund. Interest at 3% per annum, simple interest. is payable from the time of DEAF transfer till customer receives money, and bank can claim refund only in INR. Uh, Unremunerative and undesirable accounts. So these are the accounts that are not profitable or they pose operational risk. So unremunerative accounts balance is always below minimum requirements. They are open just to get benefit like issuing demand drafts. And undesirable accounts, so customer issues check without sufficient balance, which leads to check bounce, which ultimately harms bank reputation. So what action can bank take? Bank can send warning letters, bank can stop issuing new checkbooks, and if behavior continues, the bank can even close the account after collecting unused check. And bank should always monitor such accounts closely to prevent check misuse. Operational instructions. When two or more people open a joint account, they can choose how the account will be operated. So let's now look into common types of joint operations and rules related. Number one, jointly without survivorship clause. So all account holder must sign for any transaction, and if someone dies, the account is frozen. The balance is paid to both the survivors and legal heir of the deceased. For example, A, B, and C opened a account jointly, and if B dies, the account stops working until B's legal heirs are identified and money is distributed to them, jointly or survivor. So all holders must operate it together, and if someone dies, the remaining people can continue to operate. So, for example, if A, B, and C opened joint account with jointly or survivor mode, and if C dies, so A and B they can still use the account. Either or survivor, so jointly or survivor is for three or more depositors. Either or survivor is same, but it is for more than two people. And in this, anyone can operate. If one dies, the survivor needs to get fresh mandate to continue operations. Uh, Anyone or survivor. Sorry, let's discuss either survivor one more time. So in this, either of the two can operate the account. The survivor can continue using the account or withdraw the full amount. For example, if a husband or wife open an account, so either can sign, and if husband dies, wife get access to the full amount. So in jointly or survivor, it is three or more, and if there are only two, then the name generally changed to from jointly or survivor to either or survivor. Now let's talk about anyone or survivor. So for more than two people, and anyone can operate it. If one dies, then the survivor needs to give a fresh instruction to continue the account. Former or survivor, so only the first person who's former they can operate the account during the lifetime. If that person dies, the second person, the survivor, then he can use the account. So, for example, account in the name of mother and son, where mother is former and son is survivor. Only mother can operate that account until her death. First name or survivors. So, only the first person operates the account, and if the first person dies, the remaining people, the survivors, they can operate it jointly or give a fresh mandate. For example, A, B, and C opens an account. A operates, and if A dies, B and C can use the account together. Changing instruction, any change in how the account is operated. So if there's change in mode of operation, it must be signed by all the account holders. If A and B wants to change from E or S to jointly, then they both must agree in writing. Mm, Stop payment checks. So if any account holder cancels the earlier instructions, sorry, revocation by any holder. So if any account holder cancels the earlier instruction, all account holders must give fresh approval to operate the account. And even for modifying operations to modify the way the account operates, all joint holders must sign the request. Now let's move on to some special situations. Stop payment. So anyone any one account holder can stop payment of a check issued by any other joint holder. For example, if A writes a check, B can stop it. So B can provide stop payment instructions. If a joint account holder is unfit, mentally unfit, or bankrupt, then operations must be stopped immediately. Checks signed by that person should not be honored. Closure of joint account. A joint account can be closed only when all joint account holder request it. There is an exception if there is a legal issue. The bank may close it without everyone's request. If no mode is mentioned, if there is no operation mode is mentioned, it will be treated as jointly. A separate request from all joint holders is needed to change it later. Joint account with NRIs, it is allowed only with a close relative and on E or S mode only. So it joint account with NRI is allowed with a close relative only on E or S mode. NRI cannot deposit their own money into this account. If the NRI becomes the only survivor, the account becomes NRO account, and NRI can operate only on behalf of the resident for domestic payments only. What are the rules after joint account holder dies? So, claim on death of account holder. If one person dies, remaining account holder can access the full balance. If all the account holder dies, money goes to the nominee. In Hindu family accounts, if a husband deposits money in joint name with wife, it's still considered his money unless it is clearly gifted. And post death, all mandates by the deceased becomes invalid. Check signed by them after death must not be paid. Where there is no nominee or no joint account holder left, then the money is paid to the legal heirs. Conversion of account from single to joint. The person must submit a letter stating why they want to add someone, what is their relationship, specific signature of the new person is required, and KYC and documents of the new person must also be submitted. Joint to single account. All current joint holders must give written approval to close the account. A new single account is then operated in the name of the person who will continue. Nomination facilities. So, what is nomination? Nomination means naming someone who will receive the money from a bank account, locker, or safe custody items if the account holder dies. It's like telling the bank, if something happens to me, give the money or items to this person. The Banking Regulation Act was amended in the year 1983 to allow nomination by adding section 45ZA to 45ZS, ZF, and the government also made rules called Banking Companies Nomination Rules in 1985. The nomination rules have been recently amended and we will discuss about it also. So, who can nominate? Where can nomination be take place? It can take place for joint deposit accounts, safe custody in bank lockers. What are the forms which are involved? So there are three key forms. Form DA1 for making nomination, DA2 to cancel the nomination, and DA3 to change and modify the nomination. So only individuals can make nominations, not companies or HUF or trust. Joint account holders must jointly nominate. If a minor has an account, nomination is made by the guardian. If minor plus guardian have joint account, the guardian nominates for both. A minor cannot nominate, keep that in mind, and you can nominate even in NRE, NRO accounts. So who can nominate and who can be nominated? So individual account holder, joint account holders, guardian, NRE account holder. So we have just discussed who can nominate, right? And who can be nominated? Who can be nominated? So any Indian individual, a minor with a guardian to receive money from them, NRI, foreign national of Indian origin, a foreign national of non-Indian origin, they can be nominated. What are the rights of the nominee? The nominee is not the owner, just a trustee who receives the money. Nominee is expected to pass on the money to the legal heirs or beneficiaries. Even if someone objects, once the bank pays the nominee, bank is safe unless there is a court order. no loan can be given to a nominee against a deceased person's deposit. And what happens when the depositor dies? The nominee will receive the entire money in the account, and if it's a joint account, the nominee receive the money only after all joint holders passes away. For term deposits like FDs, the nomination continues even after renewal of the deposit. For multiple deposits, one can do a separate nominations as well. Now, what are the recent amendments? So, earlier only one nominee was allowed, but after the amendment was passed, up to 4 nominees can be appointed, and there are two ways to nominate. Number one is simultaneous nomination. So, you can just divide the deposit among multiple people. For example, you have 10 lakhs and you nominate A, B, and C. So, you can simply give a certain percentage to A, for example, 40%, a percentage to B, say 30%, and 30% to C. So you divide uh, on percentage basis. So this is simultaneous nomination. So you simultaneously uh, make these 3% nominee, and then there is successive nomination. So you can choose a priority order. You name A first, B second, C third. So if A is alive, A will get the money. If A is not there, then B will get the money, and B is not available, then C will get the money. Uh, Nomination for pension accounts, we have already discussed about these pointers. Pension account. So pensioner can nominate someone to receive pension account balance after their death. If a pensioner has already nominated someone under areas of pension rules, that is only for areas, not account balance, and pensioners should give a separate nomination for their bank account. What happens if a customer is dead or missing? So when a bank comes to know that the customer has died or is bankrupt or mentally unstable, is of unsound mind, the bank must immediately stop all withdrawals from the customer's account, even if check was issued before the date of death or incident, but if it is presented later. And if a customer is missing and the legal heirs or nominee wants to claim the money, the bank should have a clear policy for the same. The claims may be settled without many documentation. Only two things may be asked for. Number one, an FIR and non-traceable report from police, and then the letter of indemnity. But if the customer has been missing for a long time, so the death can be presumed only after 10 years. The legal heirs must get a court order stating that the person is presumed dead, and only then the bank can release the deposits. Now let's talk about some operational guidelines. So number one, passbook and account statement. Passbook is small and handy and useful for regular customers. Many people still don't have access to internet or computer, so passbook uh, comes to the rescue. There are certain problems with statement that they must be filed regularly. Opening closing balance must be matched. A person may get lost in the statement may get lost in the post. ATM slips don't show all details. Duplicate statements are costly. So bank should give passbook to savings bank account holders, especially individuals. If the customer wants statement instead, then the monthly statement should be sent to them. Customers should be told to update their passbook regularly, and if the passbook has many entries, give a token and inform the customer that you please collect it after some time. In passbook, entries must be clear and understandable. There should be no usage of vague words. Don't use the code that customer cannot understand, and provide brief and clear instructions to the customers. When a customer submits passbook for update and you give them a token, the passbook has to be kept under a lock and key, and staff member should be assigned for those passbooks. For monthly statements, if a customer wants statement instead of passbook, send those monthly statements every month. Keep a record of dispatch, and inspecting officer should check if this is being done. The passbook should clearly mention the nomination register. If the nominee is added, every passbook or statement must mention full address and phone number of the branch, and passbook should mention MICR code and IFSC code. checkbook and check handling. So, most banks centrally dispatch checkbooks by courier, but they should not force customer to accept risk or sign that courier is at their risk. They can come to the branch and collect the checkbook as well, and checkbook must be safely delivered. Checks are printed in Hindi or English, but the customer can write them in any regional language. And Saka Samvat, which is the India's national calendar, can be used for dating the checks. If a check has Saka Samvat date, the bank should convert it into a regular date and like Georgian calendar date and accept it. All core banking system banks must issue multi-city and payable at par checks to customers. These are treated like local checks and no extra charge should be taken for these checks. Before paying a check, banks must verify some things like check leaf from the customer's checkbook, date is not too old or a future dated. So the check should be valid, it should be presented within 3 months. Pay name is clearly written, amount should be matched. In case of companies, authorized signatures and stamp should be there. If it's a bearer check, the signature, name, and address of the bearer is provided on the check. Account balance is enough to cover the check. There should be no unauthorized alterations, no stop payment instructions. There should not be any kind of legal orders. The customer should not be dead or bankrupt or becomes a person of unsound mind. A cross check must go through a bank. It's not paid in cash. Home checks can be processed directly. For account pay check, credit should go only to the paying account. So these are certain things which should be followed by the bank. Stop payment of check. So sometimes what happens, a customer may want to stop the payment of check they issued earlier. This can happen for reasons like the promised goods or services were not delivered. The person issuing the check finds out that they were tricked into a fake investment scheme and now they want to stop the payment. And in such cases, the customer can instruct the bank not to make the payment on that check. And this instruction is called stop payment request. There are certain steps which should be followed, like record the time and date when the stop payment instruction is received. Immediately check whether the check has already been cleared or not. If the check is not yet cleared, all the details of the check must be entered in the system. And once stop payment instructions are received, the bank must not honor the check. Right? Uh, if the customer wants to revoke uh, the stop payment, so if the customer change their mind, they can revoke the stop payment instructions by writing to the bank. Once revoked, the bank can process the check normally when it is presented. Collection of check and instruments. Bank help customers to collect payments for their check, draft, and the similar instruments by crediting the amount to their account. For example, if a shop owner deposits a check given by a customer, the bank will collect the money from the customer's bank and credit it to the shop owner's account. So, sometimes what happen is the clearing process get temporarily suspended, and this cause delay in crediting checks. To reduce inconvenience, the bank may buy the checks from trusted customers and credit their accounts in advance. But before doing this, the bank must check customers' credit history, reputation, occupation of the customer, and chances of check being dishonored. Check Dropbox facility. Banks provide check Dropbox facility where customers can drop their checks for collection. However, customer must also be allowed to submit checks at the counter and get an acknowledgement. And bank must clearly display in local language that the check can be submitted at the counter. Maintain proper records each time the drop box is opened. Use check deposit machine where available for 24 into 7 convenience. If a check is returned for technical reasons and not the customer fault, the bank should not charge return fees. Such check must be represented within 24 hours and the customer must inform through mails. And when a check is dishonored, the bank must return it to the customer within 24 hours. And the bank must clearly mention the reason code for return and get the return memo signed by the bank officials. If there are frequent dishonors of the check, say if a check of one CR or more is dishonored 4 times in 1 year due to insufficient fund, then the bank will not issue a new checkbook. The bank may close the account and a warning will be sent to the uh, check dishonored. So the customer, so warning will be sent to the customer. And for frequent dishonor of checks where the amount is below 1 CR, the bank must have a board approved policy for that, for how to handle such frequent dishonors. If the payee needs to go to the court or consumer forum, the bank may provide documentary proof showing that the check was dishonored, and the bank must have internal procedures to handle dishonored checks properly and fairly. There should be no delay on miscommunication and no collusion between bank staff and the check issuer to hide the dishonor from the payee. Standing instructions, a customer can give the bank written instructions to carry out recurring payment automatically. For example, transfer money every month from savings account to recurring deposits, transfer interest from FD to savings account, pay loan EMIs automatically, pay insurance premium, electricity bill, etc. Let's move on to last topic of the day, attachment orders. So we'll start with garnishee order. So what is a garnishee order? A garnishee order is an order issued by a civil court under order 21 of the CPC. Its purpose is to help a judgment creditor, a person who has won a court case and is supposed to receive the money, to recover money from a judgment debtor, the person who is supposed to pay. Now, if the judgment debtor has money lying with someone else, like a bank, the court can instruct that bank not to allow the debtor to withdraw the money, and the bank is called the garnishee. So, this is a garnishee order. What are the types of garnishee orders? So, there are two types, order nisi and order absolute. So, order nisi is a temporary order. It asks the bank to explain why the money in the debtor's account should not be used to pay the creditor. Until the court gives the final order, the bank must stop any withdrawal from the debtor's account and inform the customer. In order absolute, this is final and binding order. Bank is now directed to transfer the specified amount to the court for payment to judgment debtor. What are the do's and don'ts? So, a bank must immediately enter the date and time of receiving the order in the system. As soon as the order received, all payments, withdrawal, check, clearing from the account must be stopped. The customer must be notified about the garnishee order, and to avoid any kind of uh, accidental transaction, the blocked amount should be shifted to a suspense account or otherwise clearly blocked in the system. If account has less than what the court has asked, block whatever is available. If the court hasn't specified any amount, then you have to, as a bank, block entire balance. And account and executor or administrator's name cannot be attached if the order is in individual's name. If a check is presented after the order received, it should be returned with the remark refer to drawer. Right of set off. So if the customer already owes money to the bank can adjust its dues first before freezing the account. This must be informed to the court. Money deposited after the order is received, so it cannot be attached. But if there is a special agreement allowing withdrawal of uncleared funds, then they can be attached. And the account is in joint name. It is held jointly by a husband and wife, and the order is only in one name, then that joint account cannot be attached. But if both the names are mentioned in the order, then not only joint account but their individual account can also be attached. Trust accounts cannot be attached if the customer holds the money as a trustee. Partner's personal account can be attached for the firm's debt since partners are jointly liable, but the firm's account cannot be touched for individual debts of the partner. Uh, when we talk about liquidator's account, so if the company is under liquidation, the liquidator's account cannot be attached because the money belongs to the creditor and not to the company. What if the customer's name is misspelled or unclear? Then the account cannot be properly identified and the bank can ignore the order until it is corrected. The customer has both debit and credit accounts in the same branch. Only net credit balance can be attached, and bank cannot adjust credit balance for possible future liabilities of the customer. Keep that in mind. an account maintained outside India, they cannot be attached. Then there are other attachment orders like income tax department, GST authorities. So beside court, government authorities like GST authorities, ED, income tax, provident fund, they can also issue attachment orders to the bank. And for example, if person has not paid an income tax of 3 lakhs, the income tax officer can ask the bank to freeze his account and pay that amount. Income tax officer can write to bank asking it to pay for the customer balance either immediately or when the money becomes due in future. What should bank do? Again, a bank will follow the same procedure as the garnishee order. Bank will record the date and time, inform the account holder, and funds are in fixed deposit. No premature withdrawal or loan against FD should be allowed. For joint accounts, the default exemption is both holders owe equal share unless proof otherwise. Submission of record to statutory authorities. So if a court or government authority asks for certain documents, then bank must submit original record if needed. Keep photocopies before submitting originals. Maintain a separate file for such notices. Keep the acknowledgement received from authorities safely. And when originals are returned, then put them back to in its official records. So this is it for Unit 5. I hope it is clear to you. But again, if there are any doubts, you can ask us on our Telegram group channel. Now let's move on to practice questions, Macmillan questions now. Number 1, a current account cannot be operated by, it can be operated by a woman, an individual, a non-resident. So the correct answer for this question is an illiterate person. A minor age dash years or more is allowed to operate a savings bank account independently. It is, the answer is 10. The minor age 10 uh, years or more is allowed to operate a savings bank account independently. For a safe deposit locker, a customer can make how many nominees? Earlier it used to be more than one, but now can be four. So given the recent amendment, four is the correct answer. Before that, more than one was the correct answer. Interest rate on fixed deposit can be different on deposits in rural areas of different tenures of individual of women. So of different tenures is the correct answer for this question. Banks cannot pay interest on accounts attached by ED. Bank will pay interest. Account frozen, again bank can unclaimed deposit. Yes. So D, current accounts is the correct answer for this question. Which of the following statement about current account is or are correct? Current accounts are primarily meant for individuals or institutions with a large number of financial transactions. Correct? Absolutely correct. No interest is payable on the deposit held in current account. Correct. Pardhanasheen women are allowed to open current account. Not correct. There is a restriction on the number of transactions that can be made in a current account. So there are no restrictions. So this is not correct. Cash deposit and withdrawals are permitted in current account. Yes, they are. So 1, 2 and 5 is the correct answer. A is the correct answer for this question. Which of the following statements regarding savings account are not correct? What is the question asking for? Not correct statements. A savings bank account can be opened by a minor under the age of 10 years provided they have a guardian consent. So this statement is actually correct. For a savings bank deposit over 1 lakh, banks are required to provide uniform interest rate irrespective of amount of deposit. No, up to 1 lakh they have to provide uniform. Over 1 lakh they are not required to. So this is not correct. Statement 3, banks may accept standing instruction from account holders for periodical payments from their savings account. So this statement is also correct. Savings account can be opened in the name of political party. No, they cannot. So this is not correct. So what 2 and 4 are not correct. Option B is the correct answer for this question. Which of the following statements regarding the BSBDA are correct? A BSBDA allows for deposit of cash only at bank branches, not at ATMs and CDMs. So this statement is not correct. There is no limit on the number of Number and value of deposit that can be made. So this statement is correct. Customers are allowed a minimum of 4 withdrawals in a month. This statement is also correct. A BSBD account holder is eligible to open multiple savings bank account. No, this is not correct. Banks are allowed to offer additional value added services, but they must ensure that the pricing is reasonable and transparent. Yes, this statement is correct. So 2, 3 and 5 are correct. So option B is the correct answer for this question. Which of the following statements are correct regarding cash certificate, annuity deposit and certificate of deposit? Cash certificate are issued at discounted value at the rate applicable to term deposits of similar tenure and amount. So this statement is correct. The principal amount in an annuity deposit is returned as a lump sum at the end of deposit period. No, this is not correct. Since it is given in periodical installments. Certificate of deposits can only be issued by scheduled commercial banks. No, this is not correct. Can also be issued by small finance bank, RRBs. CDs are issued in dematerialized form with a minimum denomination of 5 lakh. So the statement is correct. The tenure of certificate of deposit should be at least 15 days. So this statement is not correct. It should be at least 7 days and not 15 days. CDs can be traded in secondary market. This statement is correct. The interest rate on CD is fixed regardless of market conditions. So this is not correct. It can be fixed or it can be floating. So not only fixed. So 1 is correct, 4 is correct and 6 is correct. 1, 4, 6. Option A. Option A is the correct answer for this question. Which of the following statements about the Depositor Education Awareness Fund are correct? The fund is established under the Banking Regulation Act and requires bank to transfer credit balances from accounts that are inactive for more than 5 years. So this statement is not correct, since it should not be more, it should be 10 years. A bank must transfer unclaimed amount to the DEF within 1 year from the date. So it should be 3 months, not 1 year. That's why this is not correct. The depositor can claim their deposits from the bank even after it has been transferred to DEF, and the bank is required to pay the amount back to the depositor along with the applicable interest. This statement is correct. Foreign currency deposits that remain unclaimed for over 3 years must be converted to Indian rupee by the bank at the prevailing exchange rate before transferring to the fund. This statement is also correct. The rate of interest payable by the bank to the depositors or claimant on amount transferred to DEF is set to be 2.5. No, it is 3. So this should be 3. So this is not correct. It is effective from May 2021. Banks are allowed to claim refunds from the DEF for amount transferred in foreign currency as well as Indian. So banks can only claim in INR. So amount transfer in foreign currency as well as Indian rupees. So bank can claim uh, DEF but only in INR. Keep that in mind. So statement 1 is not correct, 2 is not correct, 3 is correct, 4 is correct. Okay. So there must be a typographical error with regard to options. So statement 2 and sorry, statement 3 and 4 only. This should be the correct answer. Why? Because the banks cannot claim the deposits in foreign currency, so there must be an error. So here it is written correctly, here not correctly. This is incorrect. Banks can claim refund from DEF only in INR. So it is mentioned in solution that it is mentioned given in INR. So this is also incorrect. So only 3 and 4 are correct. Which of the following statements regarding nomination in bank account is correct? In a joint account, only one account holder can nominate an individual. So this is incorrect. A minor cannot make nomination, but their guardian can do so on their behalf. So this statement is correct. The nomination in a bank account becomes the legal owner of the fund after depositor's death. Again, this is not correct. So only statement 2 is correct. Only statement 2 is correct. Say 1 is incorrect, 2 is correct, 3 is correct. So yeah, so there is again a typographic error. Sorry for that, guys. But only statement 2 is correct. Statement 1 and 3 are not correct. Which of the following statements regarding the nomination facility under Banking Regulation Act are correct? Nominations are allowed for deposits held in fiduciary capacity. So nominations are not allowed. So this statement is not correct for fiduciary capacity. A depositor can cancel or change a nomination whenever they wish. Yes, this is correct. If the depositor is minor, the nomination must be made by a legally competent person. This is correct. Nominations are valid for joint accounts only if all joint accounts make the mandate. Yes, this is correct. The nominee in a deposit account can be an individual only and not institution. So yeah, nominee must be an individual and not the institution. So this is correct. Depositor can nominate more than one individual for a single deposit account. So earlier, uh, before the amendment, no, but after the 2024 amendment, which was recently passed by both the houses of the parliament. So this statement now becomes correct. Earlier, it was incorrect. All right. And in case of term deposit, the nominee's details remain valid even after the deposit is renewed. So this statement is also correct. So 2, 3, 4, and 6. Sorry, 7. 2, 3, 4, and 7. Here 6 can also be added. 6 will also be correct because recently the amendment was passed, but I'm assuming the question was made before the amendment. That's why it states 2, 3, 4, and 7. Which of the following statements is or are not correct regarding the issuance and handling of checks in banks? The centralization of checkbook issuing activities in banks improves both the efficiency of the process and scrutiny of dispatch. So, this statement is correct. A depositor's declaration acknowledging the risk when a checkbook is sent by the courier is a legal binding practice that banks know. This is not correct. A check issued with a date according to Saka Samvat are not valid. No, this is not correct. They are also valid. Banks must issue multi-city checks to all customer, but they may charge additional fee for issuance of checks at payable at par. So again, this is not correct. So statement 2, 3, and 4 are not correct. So D is the correct answer for this question. Which of the following statements are true regarding handling of dishonored checks by bank? Dishonored check must be returned to the customer within 24 hours. Absolutely correct. Banks are allowed to levy check return charges even if dishonor is due. No, then if it due to technical reasons, then bank will not be allowed to levy any kind of charge. If a check worth 1 CR or more is dishonored 4 times in a financial year, the bank may close the customer's account at its discretion. Yes, bank may close the account. So 1 and 3 are correct for this and making option B as the correct answer. Which of the following statement regarding garnishee order is or are correct? A garnishee order applies to the balance in the debtors account at the time of receipt of the order and not any future credit received after the order has been served. So this statement is correct. In case of joint account with E or S clause, garnishee order in the name of one account holder will apply to the entire balance of the account. No, this statement is not correct. If a bank has a setup on FDR, the garnish order attach the fixed deposit amount, but any excess amount beyond the lien mark can be attached. So yes, or garnish order cannot attach the fixed deposit account, but excess can be attached. So this statement is also correct. When a garnish order is issued in the name of individual and individual operates a partnership account, only the personal account of the partner can be attached for the firm's debt. So if it's an individual name, then only personal account will be attached. So this is correct. A garnishee order served on an account held outside India can be enforced to attach funds in the foreign amount for an account. So this statement is not correct. So statement 1, 3, and 4 are correct, making option D as the correct answer. I hope things are clear to you now. And if there are any doubts, you can ask us on our Telegram group channel, JAIIB CIB Prep. Let's meet again with unit number 6. Till then, please take care and bye bye.